Hello, all. Despite a modest rebound in US stock markets on Friday ahead of the President's Day long weekend, all three US major stock markets finished last week lower. A driver of the declines was this ongoing investor anxiety over huge amounts of AI capex, best illustrated by Amazon, whose share price fell for a ninth consecutive session on Friday, the stock's longest losing streak since July 2006. Looking ahead to this week, the big, beautiful bill tax refunds are set to begin, and there are hopes that some of these funds may find their way into flagging tech stocks. Meanwhile, the US earnings season continues to roll on before NVIDIA provides the unofficial earnings season finale on the 26th of February. The economic calendar is packed this week. It features the FOMC meeting minutes, advanced quarter four GDP, core PCE price inflation, and flash PMIs. Let's take a look at the charts to see how they're lining up at the start of this new week. This is the NASDAQ on the weekly, and what you can see here is a few features we've highlighted previously, but I just thought it was important to recap. You've got this double top here and here, and what you have since seen since that second double top form was some downside follow through. And that downside follow through is starting to take it towards some very important support levels. Now, if we look at the daily chart, you can see the support levels I'm talking about. We've just broken recently below this mid-December low. There wasn't a lot of follow through. In fact, there was a rebound into the early stages of last week before it started to wobble again. And this has brought it back down towards this important level of support coming from this low here on the 21st of November, reinforced by the 200-day moving average. So that comes in around 23,800-ish, 880-ish rather. And what we're looking for is a test of this support, which is really only part of this corrective price action we've seen. And then we'll take a look at what comes next. So you'd expect this level to provide some support initially, and where we go from there remains to be seen. But at the very least, I would like to see a test of this support area, and then we can either work out whether it's going to fall below this 200-day moving average, or it really is just the final leg of a correction, and then the NASDAQ can rebound. When we look at the S&P 500, it does tip our preference in favor of further declines, because what you can see on the S&P 500 on the weekly timeframes is 6 weeks where it has tried to get above 7,000 and just failed. Now, there is no signs of rejection yet. All we're seeing is it's knocking its head up against this 7,000 level without falling away. But if we were to break below support, let's say at 67.50, probably a pretty good sign that the NASDAQ has broken below that 200-day moving average, and that would bring the S&P back to this support coming in around 6,500-ish. Now, last week we spoke about the Dow, and there was some promising signs for the Dow. It broke out of this range it had spent the past 5 weeks, or the first 5 weeks of 2026. It broke above here, and then it pushed up to a new record high coming in just above 50,500. But just as quickly, it fell back into its old range. Now, this leaves us a little bit uncertain of what comes next for the Dow Jones. Falling back into the range would suggest that potentially we're seeing a false break higher, particularly if the Dow was to break below the bottom of this range. That would increase confidence that we have seen a false break higher. But we could also see the Dow Jones in the early part of this week consolidate and then try and take another run at these highs. So we're watching very, very closely. I guess in terms of where our preference is, we're seeing signs of topping now in all three major US indices, but the downside follow through hasn't been seen, particularly in the Dow and the S&P. And at the moment, the pullback in the NASDAQ does appear to be more of a correction rather than a reversal lower. But we do need to see how it performs in relation to that 200-day moving average. That's all for this week. Stay tuned for more updates ahead.